Well, change the name, by the way. It's not the Pelosi Act. It's the Honest Act. He was the only Republican to vote with Democrats to ban it, to ban congressional stock trading.
OK, got it. Thanks very much. Look who's with us now, Kentucky Senator Rand Paul. So you're the chair of this committee, which voted yes on the Pelosi Act, but you voted against it. Why did you vote against it?
Well, I think we're going to discourage good people, successful people from holding office. Part of the bill, I do believe, would forbid the president immediately from buying and selling stocks, and it would exempt him from the divestiture part. Future presidents wouldn't be allowed to own things. So if Donald Trump were the next president, which, some say he might run for a third term, but he would be forced to divest everything. He would have to sell all of his possessions. And I think Donald Trump's got a complicated, probably financial empire. And a lot of people just wouldn't want to sell it or get involved with all of that. You also don't want to sell it during a downturn. There's a lot of reasons it would discourage successful people. And I frankly think that some of the success of Donald Trump being president is that he was used to the world of high finance, used to making deals with large amounts of money. Yep. And I don't think we want to discourage people like that from holding office.
OK, fair enough. I want you to listen to what President Trump had to say about tariffs and the economy. Watch this, please, sir.
Critics said that our tariffs would hurt the economy, but the data shows the exact opposite, and the exact opposite is happening. The U.S. Treasury has taken in $150 billion from tariffs, and we'll be adding about $200 billion next month for totals that nobody's ever seen before, frankly. And foreign imports were down 30% in the second quarter, while the domestic auto production surged by a stunning 36%.
Mr. Senator, you've been opposed to the tariff regime because you call it a tax. But it's not a tax that's being paid by American consumers. Some of this tax is being paid by exporters, isn't it?
Well, it is a tax and it is a cost. And so if you go to Walmart and you buy an object that's made in China, Walmart imports it and Walmart pays the tax. And Walmart's an American company. That becomes part of their cost of goods.
Not if the Chinese manufacturer reduces its cost to America. I mean, they're paying the tax.
Yeah, that would be unlikely. Well, no, what happens is when you have a tariff, prices rise to meet that tariff. So if the tariff is 20% on Chinese goods and there's a domestic manufacturer here, the Chinese goods don't go down. They may already probably be at the lowest point the market will bear. What happens is the American goods come up. So you may replace some Americans with goods with Chinese goods. You may have the American goods being purchased, but they'll be purchased at 20% more if you have a 20% tariff. One of the reasons you haven't felt the pain yet of the tariffs is many of the contracts are locked in. So if I make shoes in Vietnam and I sell them here, I have a locked-in contract maybe for 3 months or 6 months on the cost of them. As my costs rise and as those contracts get renegotiated, inevitably the price of shoes go up. But I don't think people will start making shoes again in the United States and it will shift from Vietnam. What will happen is shoes will be more expensive.
OK, well, we've got the tariffs in place. We'll see how it works out. Senator Rand Paul, thanks for being with us, sir. Always appreciate it.
Thank you
very much. Yes, sir.